What's up, all my Cashapp stock investors? It's Shadai back again with another Cashapp investing video. Make sure you hit the like button if you like this video. You either hit the like up or you hit the dislike. Comment below. Let me know what you think about this video as we get into some more details. Now, we have some big things happening in the world. Obviously, one, the coronavirus, which is majorly affecting the stock market, and it can maybe potentially continue to negatively affect the stock market if you're in the wrong business. Our country reported over 200,000 jobs last week, but it was outshined by the coronavirus epidemic. As we go forward into the next few months, you're going to want to invest in some companies that maybe have nothing to do with China, are not even based in China, are not dependent on China. If you are invested into a company that is dependent on China right now, it is not looking good. Sell if you can. Hold out if you have the money to spare. But I don't think that we know everything that we should know. The dark cloud that's been looming over everybody's head is the stock market going to crash? Are we going to go into a recession? The stock market definitely has a potential of crashing. And I don't think that means everybody losing money. I just think that these hedge funds are coming in and they're raising some stock prices up and then they're pulling out, and then that's making people lose money because people have this assumption that this company is a very good company when they see the price start to go up. So like I've said in the videos before, if you see it rising, don't chase it. Just do your research and just be careful. Now, we have a few companies that are expected to report this week. Lyft, Under Armour, Barrick Gold. And Under Armour specifically, I would stay away from. I just think that they have too much international ties. They have ties in China, and China's obviously anything that has any company that's intertwined with China right now is just not a good company to invest in at the moment. Lyft, I don't expect them to do anything crazy this week. But Barrick Gold is a very interesting company. They are located in Toronto, Canada, and I've spoke about them before, and I think that is a potential safe company to invest in if we continue going into this epidemic or we turn into some sort of recession or world recession. Barrick Gold, for one, is like the number one leading gold producer in the world. And if we go into this recession or our money devalues, like I've heard through my research, gold and metals are very valuable and will be the next thing that will be of highest value if our dollar value starts to decline. I always talk about diversifying your portfolio, and Barrick Gold is a company that I think is more of a safe bet than anything. I don't think it's a company that's going to make you rich. I don't think you should throw all your money into Barrick Gold. I think that it's just a safe play. It's a nice stock to have in your portfolio, or multiple stocks to have in your portfolio in case everything shits the bed. There is a possibility that things can go bad for a lot of companies in the next 6 months. So you want to be intertwined in some companies that can still take you through the recession, because I don't believe that all the stocks will crash. I don't believe every company will be doing bad. There will be some companies that will outlast whatever recession that comes, because there's just so many people on this earth. I just don't see us just like everything just completely going flat out. I could be wrong, but I just don't see it happening. I do see some companies being able to make it through if they have something good. So Barrick is one of those companies. Like I always say, do your research on Barrick Gold. I believe they are, let me just double check right now as I'm speaking. They are trading around $18. I've been on this company for a little bit, but yes. Barrick is at the moment trading around $18 per share. So it's very affordable. I love talking about these very affordable stocks because I know whoever's watching, you got $20 to spare. You got $40. You got $100 to spare. You have money. I can easily be up here talking about the Amazon stock, which I believe Amazon will make it through any recession or epidemic, because let's say if the coronavirus continues to spread, that means people aren't going to be going outside. That means people aren't going to be eating out at restaurants. That means people aren't be going into malls. That means very bad things for a lot of stores that have storefronts and they're not really working on the online sector. Who knows? We can go into a point in life where we are mandated to stay home for safety reasons. You just never know how far a virus can travel, and once it gets in, it can get in. So Amazon is definitely a stock, but it being $2,000 a share, it's not something I want to talk about, because I want to talk about stocks that your average person can afford, because those are the people I want to see win. The rich people are already winning, and I want to see us win. If you want to win, like me, put a thumbs up in the comment section below. That way I know who really, really, really wants to win. I'll continue to talk about affordable stocks. Barrick Gold is one of those stocks that's affordable and has value to the economy even through a bad times. I also wanted to talk about two companies that could potentially see more increases in 2020 if we go into an epidemic, a bigger epidemic, or some sort. Well, we already are in the recession, we have to admit that. But if we go into a worse recession, two companies that you want to keep a watch for, and that's Dollar Tree and Dollar General. And I know you guys are sitting there like, what? Like Dollar Tree and Dollar General? Like what? Like, why would I even invest in that? Listen, if we go into a worse recession, people are going to get cheaper. So from my knowledge or my research, what I know, in the recession, that doesn't mean like the whole world is poor. That means people are consolidating. People are not shopping like they used to. People are not spending like they used to. Everybody's spending less money, and what better not store to go to than a Dollar Tree or a Dollar General? They sell literally everything. Food, clothes, toys, stuff for the home, stuff for the kitchen. They sell everything. So imagine a good percentage of the economy consolidating and being cheaper, and saying, instead of going to Family Dollar or Walmart, let me go see if I can find the same thing at Dollar Tree or Dollar General. Think about how much more money that those two companies are going to make just off of recession alone. You can literally find everything for $1. Like, I've had instances where I was like, oh, I gotta get this. Let me go check if it's at Dollar Tree. Let me just go see. And boom, Dollar Tree has it. It may not be the most quality product, but it's, for the most part, it's gonna get the job done. So I think that Dollar Tree and Dollar General are definitely two stocks that you want to keep an eye on. I wouldn't say that I will be investing in them right away, but I'll be keeping an eye on Dollar Tree and Dollar General over the next few weeks and months, depending on what stories come out. Now, if the coronavirus disappears within the next week, they won't be on my watch list. I'll be honest. But if the recession talks continue to brew and things look like they continue to get worse, I will be investing into those companies, because their next quarterly earnings are going to be skyrocketing, because people are getting cheaper and they want things for less. When people are getting cheaper, they don't care about the quality. When you don't have the money, you don't care about the quality. You just want whatever it is you need. So that's where I see those companies winning. They're basically going to gain off the bad economy. Although Dollar Tree and Dollar General aren't the most cheapest stock, they're still pretty much affordable. Dollar General is around $154. Dollar Tree is around $87. So it's just something to keep in mind. If you see those numbers start to move up, you know why. It's because people are capitalizing on their great priced products. I have one more company that I want to talk about before I end today's video, and that is a company to watch. I might invest in them this week, depending on what happens in the world. But GE is a stock that has turned around and will start to see even more better days going into the rest of 2020 and going into 2021. Now, this stock was like a no for a lot of people because of all the money they were losing a lot of money. But their new CEO consolidated. He's turning everything around, and now everything looks like it's on the right path. Their focus is in power, aviation, and healthcare. That's what their main focus is right now. So they've consolidated to those three things. From my research, I kind of heard that they might be capitalizing on this coronavirus by sending these monitors that they have to China. China needs these monitors that GE has, that GE Healthcare has. So could GE be gaining off this coronavirus, off this epidemic? If it continues to spread, they potentially could continue to gain, or I don't know how it's working. I don't know if they're selling the monitors. I don't know. I just know that they are there at the forefront with figuring out what's going on with that problem. So I think GE has tons of potential. I think that they have the potential to maybe even reach $15, $15 to $18, maybe over the next six to 12 months, depending on what happens in the world, obviously. But they are on a good track. As far as their aviation, I know that they're intertwined with Boeing off of a contract, and the 737 Max is what everybody's talking about. And I think I overheard something about parts, and so GE is probably on my top high watch list. They've been on my watch list the last few weeks, and I should have got in when they was at $11. They're now nearing the 12, 13 mark, but I really do think that they have potential to get to either $15 or $18, depending on some factors happening in the world and the economy, or even with Boeing. They have a growing free cash flow, which is very good. And a lot of analysts are talking about the growing free cash flow. So that's a very good sign. I think they had a big analyst critique them that had been critiquing them down. And he turned around last week and said, no, yeah, they on a good track. So when you have analysts that were down talking them, pulling their pride aside and saying, all right, G's back, they back in a good path, I think that's a major good sign. And what I've learned through my experience, my research, is that when there's good talk, good potential talk, that's usually a good sign. When there's negative talk, that's usually a bad sign. I learned the hard way last week with Aurora stock. I decided to stick it out with Aurora stock. Through the bad talk, I really had this thought in my head that, Aurora's going to turn it around. Every analyst was bad talking them. They shot up at one point last week, which I think it was due to hedge funds. I don't think it was anything major that happened. I think hedge funds jumped in, shot the price of the stock up, and then they pulled out and made some money. And I learned the hard way. They lost their CEO last week, and I lost money. So research. I'll always say this. I'll continue to say this. Research is key when it comes to learning about the stock market. I'm fairly new. For obviously you guys that know, I'm not a professional. I just do my research and I share it with you guys, and I do my own investing as well. But like I said, I learned the hard way because I wasn't paying attention to the research. You can't sit there and be like, oh, well, this company's going to turn around. The research is what's going to tell you. The quarterly earnings is what's going to tell you. The projected, I just think that we can't have some emotional attachment to any of these companies or stocks, or have some emotional belief that some wild thing's going to happen. The economy is driving all these forces. The fundamentals drive these forces. Things happening. So pay attention to everything that's going on. Pay attention to reports that come out. And I think that your money will be safe. Like I said before, right now you have to stay away from any company that's intertwined with China, because you can definitely see some type of decrease if this epidemic continues. I hope you guys learned something today that you can use for your portfolio. Give me a thumbs up if you agree. Give me a thumbs down if you disagree. Tell me about some safe stocks that maybe you are investing in that you think is going to get you through this recession. Tell me if you decided to pull out, if you decided to pull all your money out. I ain't gonna lie, I pulled a good portion of my money out the market last week after I lost some money, but I'm looking to pour back in this week. I'm looking at, like I said, Barrick Gold is most likely going to get my money this week, especially they're expected to report on Wednesday, I believe. So let's talk about it. Tell me what y'all think. Tell me what y'all working on, and tell me how y'all investments have been doing during this fall down, I guess, of the stock market. Which, isn't this the fall that we all wanted? Isn't this the fall that all the poor people wanted so that we can get into? I don't know. Let me know what you think. Let me know if you think this was the fall that we all wanted. I think it is. So let's do our research. Let's have a great day. And thank you guys for watching. I'll see you guys on the next Cash App investing video. Peace.